Hi all, welcome back again to Invesfinc on this Monday morning. On Friday, all the major Indian indices continued their uptrend, with Banknifty and FINNIFTY are at their all-time highs. Now in today's video, we will explore how to stay relevant in this uptrend. We will also share the key support and resistance zones for Nifty, Sensex, Banknifty and FINNIFTY indices. We will also dive into the stocks that made headlines on Friday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them in today's trade. Before we jump on to the details, please go through the disclaimer. Now let's begin with the analysis. First up, Nifty 50. So as you could see, we have surpassed the major key resistance or the hurdle what we had, which we had been hovering for a very long period of time. Now from last 2 to 3 trading sessions, we are above those levels of around 25,200. Now we have substantially moved ahead towards 25,500, beyond 25,500 levels, and trading at 25,650 close to. Now the expectation would be to move ahead towards the 26 levels and cross the previous 52-week high of around 26,300, 400 odd levels. So once we cross those levels, then we would be on the next leg of up move. Could be this range will be from 27 to 29,000. So this is the expectations that where we are expected to head or move towards in the coming weeks to months. So as of now, if we see, the trend seems to continue on a positive side, and the first resistance for us is going to be around 26,000 because that is a round level, and we could see a selling pressure that might come in at those levels. Else if then we are headed towards the previous 52-week high what we had made and would cross those levels very soon. So how the open interest looks, let's see. So there is a kind of key support that we could very evidently see at this overall zone. So from 25,000 levels until 25,500 is where we see significant open interest positions from the put writers. So what this suggests is at every 100 level we have huge put writing that is available, and it is getting added every passing day. So for 3rd June weekly expiry, as long as 25,500 remains sustained, then we might not fall or trade below this level. So on the higher side, if we see until 26,000, we see significant open interest positions that got built up alone in yesterday's trade, and 26,000 being the highest open interest positions we have on the call side. Next to that is 26,500 levels. Again, the call writers are expecting that Nifty is not headed to move towards 26,000 and 26,500 levels. So immediately once we cross or trade on a sustained basis at 25,700 levels, then we would easily move towards 26,000 levels in the coming days. So PCR overall stands at quite positive 1.2, and at the money PCR is 1.01, which is again positive. Now next is Sensex. So Sensex have also been giving the higher high and higher lows. So we are headed towards the next leg of up move on Sensex to around 85,000 levels, and then beyond that we would cross the previous 52-week high of around 85,800 odd levels. So now from here, from the last 3 trading sessions, we have been inching ahead, and we have surpassed this significant resistance of around 82,600 levels. So from here on, the next leg of up move is expected to come in beyond 85,000, and then once that happens, then we will head towards crossing the previous 52-week high. So the major support that should remain for us is this level now, around 81,300 to 400 points. So once we see a sharp sell-off coming in from the higher side towards these levels, then that should be the area where we should, first what wait and watch, and then next is, what the Sensex is, heading towards. Is it going to make a reversal? If there is a reversal, then again a strong buying would come in, or if the fall continues, then we might head towards the panic selling below to these levels around 81,300. So below to these levels, we should cut short our long positions and continue with the trend. Now, from the open interest perspective, if we see 84,000 remains strong support, both from put writers. Again, call writers have also been taking the positions, writing from their end, with the positive note that maybe beyond these levels, it is difficult for Sensex. So the very first resistance is around 85,000, again a round level. The second resistance is around 86,000. So these round levels is where we have been seeing high open interest positions from the call writers. So the support that we have is at around 83,000, which is immediate support that we have. But as you could see, at every lower levels we have significant call writing that has happened. So it is not so easy for Sensex to fall from these levels. So we might hover in this trade from 83,000 to 85,000 in this entire 1 month. Once maybe we cross this level 85,000, then we will head towards 86,000 very soon. So PCR stands at 1.4 overall, which is very positive and bullish. At the money PCR is at 0.80, which is again good enough for giving that momentum on Sensex to continue. Now Bank Nifty. So Bank Nifty had surprisingly crossed all the wall of worries, and 57,000 level was the previous highs that we had made, and then we have crossed those highs as well in day before, on Thursday as well as on Friday's trading session. So overall now, as we had discussed in our previous video, we are headed towards the fresh highs on Bank Nifty. So there shouldn't be any short positions that should be taken at the higher levels, considering the fact that now we have approached the highs. From here there could be a reversal on the downward side. So don't expect that those things happening. We might head towards 58,000 in the coming days itself, and then next leg of a move would come and beyond 59,000 towards 60 to 61,000 levels in the coming days. So maybe this entire monthly expiry we should watch for those levels to come in. If the long biasness continues in the overall market, the support immediately for us should be at around 56,500 levels, which is 1,000 point away from this level. Now Bank Nifty open interest. So as you could see, we have already crossed 57,000 levels. So significant open interest built up from the put writers has happened at this level, and also there is additions happening around 57,500 levels too. If you see the open interest built up from the put writers, and then lastly at 57,000 again the put writers have been holding their positions. Now this will remain true and positive only when we trade above 55,500 for a couple of days. That would give the next leg of up now for Bank Nifty for approaching 58,000, then 59,000 and above. So PCR overall stands at 1.1, which is again positive, and at the money PCR is 1.14, which is quite bullish. FINNIFTY has also traded positive with 95 points and closed 0.35%. So overall now FINNIFTY is also at all-time highs, trading at 27,344 levels. So we are just at 150 points away from that round level of 27,500. But the way how the buying interest has come in, so if you see out of roughly around 6 trading sessions, uh, almost 5 trading sessions we have were positive, and then now also this signifies that this positive trend is expected to continue beyond maybe 28,000 again. Now let's see open interest. So major action on FINNIFTY is around 27,000 levels until 27,500. So this is where we see a lot of put writing that had got initiated from the put writers. Now this zone is going to act as a significant support for us. 28,000 is where we see roughly around 80% of open interest positions on the calls have been built or added. So this signifies that at higher levels there is going to be a selling pressure on FINNIFTY. So which is roughly around like close to 2 to 3% from this particular stage. So we might take some time. Overall, PCR is 1.3, which is again quite bullish and positive. At the money is 1.10, which is again quite bullish. The last segment of the mid segment for us on the discussion remains at FII and DII data. So this screen will help us understand what kind of positions the big players have taken, and how we have to accordingly navigate through to ensure that we do not take any losses. So now if you see on the index futures, FIIs have been short, but they have been cutting down their shorts overall. So from previously 1 lakh shorts to now just 33,500 shorts, explains that FIIs are gradually trading on a positive note. So there have been good amount of long positions that are held, or maybe adding. So if you could see over here, now on index options they have mildly turned positive with 2,600 contracts holding on the longs. Proprietary traders on the other hand have been quite bullish on the index futures, though they have held their short positions to the tune of 11,750 contracts, which is not significantly high, but yes, still they are short. However, they have been hedging through index options, and majority of their long positions have got initiated with 1.12 lakh contracts alone on Friday. And net overall positions have been held as 2.24 lakh contracts on index options. So the broader markets, if we see world markets, typically have performed well on Friday, and that positive performance would help Banknifty to also open on a positive note, at least by 0.25%, and continue the long biasedness from there. So if that happens, it is the proprietary traders who will get the maximum benefit, because they have been net holding long positions. Client on the other side have been cutting down their index futures positions, and now they are just holding 16,350 odd contracts from the previous 50-60,000 contracts on long side. So yeah, there have been humongous sell off in the index futures. On the index options, it seems to be quite surprising that the DIA, retail traders have continued adding their short positions on Friday as well. So net 1.14 lakh contracts have been added, which overall gives 2.08 lakh contracts on the short side. So this will lead to losses if today also, if we see the markets headed on the higher side. Now coming to the cash market positions. So DIIs have been selling off their cash market positions in the equities, and they have sold roughly around 590 crores in Friday's trade. However, this has been absorbed by the foreign institutional investors, and they have bought 1,397 crores in the cash market. So overall, FIIs in index futures have been cutting down their short positions, and adding longs on the index options, and also adding longs on the stock equities. So overall, FIAs have been bullish, have turned bullish in fact, and are on the buying spree for almost a week now. So that is a good news. So that this long-term growth might continue from here on. Now the last segment of discussion for us is going to be the trending or buzzing stocks. So the Friday's two stocks that we are going to discuss is first Adani Total Gas Limited. So as you could see, Adani Total Gas Limited closed at 682 levels in Friday's trade by jumping roughly around 37 points, which gave 5.72% jump overall on Friday's trade alone. Now, the major driver behind this upward momentum was the strategic alliance that got unveiled on June 25th, 2025. And under this partnership, select Adani Total Gas fuel outlets will now offer Geo British Petroleum's high performance liquid fuels, including petrol and diesel. So, in return, select Geo British Petroleum fuel stations will integrate Adani Total Gas Limited's compressed natural gas dispensing units with ATGL authorized, areas, geographical areas. So this collaboration is being viewed by the market as a significant synergy and will reshape India's fuel retail landscape. So this is going to leverage the extensive network of both entities, ATGL, which has the strong presence in the city gas distribution with approximately 650 CNG stations, and Geo British Petroleum's network of around 2000 retail outlets will be utilized by both the organizations. So this partnership is now expected to enhance the availability and accessibility of a wider range of fuels for consumers, and that creates new revenue streams for both the companies. So we actually in fact have been on a turnaround at around 625 levels immediately once this news was announced on 25th June. Alone on Friday, since there was a resistance at these levels, there was a big jump that was given. Now the next level of resistance is around at 720 levels. So the expectation is that we would continue to surpass even these levels in the coming days, and the next further hurdle is going to remain at around 820 levels for ATGL. So overall, the stock remains positive for the long-term basis. Now next is Phoenix Mills. So shares of mall developer and operator Phoenix Mills Limited declined 3.49% in Friday's trade. So the drop was majorly due to industry reports on share drop in the housing sales, which we had already discussed in the Friday's trade. So overall, realty sector has been underperforming. Last Friday, the major underperformer was Prestige Estates. Now on Thursday's trade, it was Prestige, and now on Friday's trade, it is Phoenix Mills. So overall, there was a report that was generated by Enrock Research, on which is the major real estate consultant, indicating a significant 20% year-on-year decline in residential property sales across top 7 cities during the second quarter, April to June of 2025. And also there was another report on the private equity investment, which was published by Knight Frank India, which revealed that there is a steep 41% year-on-year slump in the private equity funding into the Indian real estate sector during the first half of 2025. So immediately after these news that came in, the realty sector started underperforming, and that is the reason we might see for the next couple of days this underperformance is expected to continue. So the major support that we are going to have is around at 1500 levels or maybe 1475 levels. So trade cautiously, and if you see we approaching there, have a wait and watch kind of scenario. And if the reversal happens on the longer side, there are high probabilities for us to get good trades to trade on the long biasness on this particular stock. So that's it from our end. If today's analysis brought you value, don't forget to hit the like button and share it with your fellow traders. For daily pre-market report updates, make sure to subscribe to our channel and tap the bell icon so that you never miss an episode in future. So you can also join our Twitter and Telegram channels. Links are given in the description. Thanks again for watching, and we will see you in the next video.